you so much, Carrie. Yeah. Okay, let me share my screen. Okay, can you guys see my screen now?
Yes, yes.
Okay, thank you. Yeah, before going, I will introduce something about myself. I'm a chartered professional accountant, CGA, CIA, and MBA, and I'm in summary, I provide the accounting tax service for Northern Ontario's. Okay. Mhm. For this webinar, it will focus on corporate income tax. In last webinar, we shared some information or knowledge on GST, HST. And it's a different, that is this kind of corporation income tax is for, corporation income. Only corporation has a profit, they needed to pay this kind of tax. And during this webinar, I want to say after this one, what you can learn after this education. First one, I will explain how corporate taxable income is different from accounting profit. You know, all this tax return will based on accounting financial statement. There has a profit or loss, but it's not the profit for tax purpose. We need to do some adjustment, either add back or deduct some expense or some revenue. That is the first topic I want to share with you guys. The second one is that the tax rates. We are based in Ontario. We need to pay tax for federal, also for Ontario, and different size business will apply for different tax rate. It's not the same to all the business. That is a business owner needed to know before do this kind of tax. The third one I want to share is the filing or tax balance. When I need to do the tax return, when is the deadline to pay tax balance? And do we need to pay tax installment? Yes or no? We need to know before, do the tax return just in case for some little fail we have to pay penalty or pay interest. The last one I want to share with business owner is that after do the corporate income tax is not the end. We have to have lots of records. For example, accounting records, transaction, or supporting documents. That is just a CRA required. We have to keep those documents for maybe 7 years at least. Okay. Oh, before going, I will say some basic requirements. The first one, is that this corporation income tax only for incorporated business. If you are self-employment, it's not incorporate. You don't have to do the corporate income tax. Um, this incorporated business can be either federal or Ontario. All this business should do this tax return. And after business resists as a corporation, the first thing business owner needed to consider is the fiscal year end. This CRA give two options. One is within 53rd weeks. It's about 12 months. For example, this business registered in June, then the tax return may due after 12 months in next year's before June 1st. The other option is pretty easy. Just use December 31st. That is, I always recommend it. The reason is that it's pretty simple for business owner to remember. After December 1st, that is the new year, then we needed to prepare for the T2, the corporation income tax return. The only disadvantage is that maybe the business registered in June or in July, that is less than 12 months. We needed to do one tax return, but that is only for the first time. In the future time, that is every year. It's annual tax return. Okay. Mhm. And also in last some webinar, I also highlight GST, HST, the tax period should be aligned with this corporation income tax. It will be easy to get just one accounting records. We don't have to reconcile the difference, the timing difference. That is, we prepare one accounting records. We can do two kinds of tax. One is GST, HST. The other one is this corporation income tax. Okay, that is my recommendation to select fiscal year end. December 31st will be better, but based on your business, because some business will high season or some low season, you can choose different period for fiscal year end. Next, the corporation is a separate taxpayer. What's the meaning? No, that is taxpayer is not an individual, it's not the business owner. Business owner still has a individual or personal tax. You have the income either T4 or from the business. That is, the business owner needed to do the tax. But the corporation, that is independent legal entity, that is a single separate taxpayer. We cannot mix them together. Some taxpayer maybe have some self-employment business, then they can combine the business self-employment business together with the business owner, because that is not in corporate business. But this one is totally different. Okay. And the corporation, because the corporation have earned income or revenue, then they needed to do the tax return. And CRA will do the review or something to give a notice of assessment. This NOA is to the corporation, it's not for personal. Okay. And the other thing I want to highlight is the corporate cash is not the shareholders' personal money. We needed to separate very clear to know which cash is for business, which cash is for the business owner. Okay. That is the when we needed to fill T2. T2 is the corporation income tax. Most corporation is for yearly, that is every year. And I think this is start 2024, CRA asked all the T2 tax field must be electronic. We have to use a T2 software to do the tax return online. There has no menu, no print out T2 forms. We have some clients, they just continue to do the tax return manually. They print out the forms and fill the numbers and mail them to CRA. After they do the tax return, they get the letter from CRA to say you have to pay 1,000 penalty. That's the reason. That is just because the clients used a paper tax return. But fortunately, if you did this error, you can get this 1,000 penalty relief that we can apply. If you have this issue, just write a letter to CRA. I didn't understand. This is the first time I do the tax return by paper after 2024. I apply this penalty relief. I think this will be 100% or more than 30%. You can get this penalty refund. Okay, but you have to talk with the CRA. Don't pay this 1,000 penalty. It's a big amount. Just apply the relief or waive penalty. Mm-hmm. Oh, if you I just mentioned the fiscal year end. If business owner choose one fiscal year end, they also want to change. You can submit the plan to CRA, and it's have to wait CRA approve. Then you can change the fiscal period. Okay. Mm-hmm. The deadline, I just mentioned there's a 53rd weeks. That is the tax year. For the first time, if some business register in June, they can apply, the fiscal year. That's their 53rd weeks to do the tax year. The first tax year begins on the incorporation date. If it's June 1st, that the tax year start date is June 1st. That is the same for all the business. Mm-hmm. The first T2 is establish the chosen year end, maybe December 31st or some fiscal year end that the business owner likes. And changing the year end generally requires CRA approval. We cannot change by ourselves. Okay. Financial statements and GIF information match master the T2 period. What is a GIF? GIF is the financial statement, balance sheet, profit and the loss statement or other information. For example, when the business is set up, this kind of register information, we needed to submit or do the tax return when we do T2. That is the corporate tax return we have to do. Mm-hmm. The taxable income starts from accounting profits. That's the reason we need to get a financial statement ready. Then we can do the T2. Accounting income, that is, we have the revenue, we have the cost, we have expense. Then we can get accounting net profit. After getting this information, a tax preparer, for example, a CPA or some accounting firm, they need to add back some deduction because that kind of deduction is not eligible for tax purpose. Also, we have some revenue is not for it's for accounting purpose, but it's not for tax purpose. After this adjustment, we can know what is the amount for tax purpose. We got the tax profit. I can show some example in later, and you can understand what is accounting profit and what is tax profit. It's a different. We need to do the adjustment. That is, we know why T2 is not easy to do. Yeah, that's the loss of adjustment. And we also needed to expense and capital assets. That is total different when we do both accounting and tax. Expense, that is routine. We have a rental office, that is expense. But if we pay a big money to buy an office, that will be assets. This assets means you benefit on this expenditure for several periods. It's not only for 1 year, maybe 2 years or 3 years. We have a computer. This computer, we don't only use them only for 1 year. Next year, we will continue use it. So that is a capital assets. But if we just buy maybe what kind of question? I can say some example. We just buy some materials that is only for this year. Then this material will be expense. Also, this expense must be for business. It's not a personal use. We spend this money to buy some service or material or some office supply to get income or revenue. This is for business. Otherwise, if the business owner buys something for personal, that it cannot claim under this business accounting and tax purpose. Also, this expense, if it's deduct from this year, that is the expense. It's not capital. Capital can be benefit for future year. I can example for this office, computer, or even cell phone. Cell phone maybe is very expensive. We spend lots of money, but we can use it for 2 years or more than 2 years. That is a capital. If it's a capital, we have the CCA. CCA, that is capital. What's the CCA? Sorry, I got forgotten the name. Anyway, that is can be depreciation or amortization. We got this capital expenditure apply for tax purpose within several years. It's not within 1 year. We can, deduct this expense also, but different is only it's not 1 year. Mhm. So that is business owner need to know what kind of expenditure is for tax purpose, what kind of expenditure money paid for capital assets. We have different accounting and also tax records. Mm. Now we are going to talk about a tax rate. This is a little difficult to know what is tax rate this business will apply. My suggestion is, business owner can track how many revenue you have for this year and how many business you have under this group. If, for example, a group, in subsidiary, we have lots of dealership is a group. For example, Palladino or Lake King, they all group. They have different trading operating business. And if this group have several business, then they may called associate business. Then this first one, 11.2, that is not shared. It's only for the group. It's allocation to different business group. That is um, how to say, if you only have one business and you are CCPP, then Canada profit controlled business, you may enjoy this low accounting rate. You may also have to go to a high tax rate because that the business revenue over the small business tax rate, or maybe some you have several business, you have a group that's associate business, you have to apply the high rate. That's way there has no standard answer to whether your business is low rate or high rate. We have to always check the CRS requirement. Mm-hmm. That is small business rate is conditional, as I said. It has to be CCPC and active business income instead of passive income. And also the group is also has a business limited. If your group have several business, even that is active business, you cannot have each business limited for its one. You have allocated. Mhm. That is the limit is shared among associates corporation. And personal or specified investment income, that is a passive income, is not eligible to apply this lower tax rate. Mhm. Yeah, that is 500,000 is the business limit. As I had, if you have a group that is associated business, then this 500 business limitation has to allocate it among the business. But if you only have one business that is 500,000 is the business limited. And if you have higher revenue, 10 million to 50 million, then the 50,000 business limited will continue go down. That is, the business limitation is apply to different situation. We always need to check the revenue is inactive or active business or group or something like this to make a decision which tax rate the business can apply. Um, Another thing I want to say is that business owner always makes some money to this business or withdraw from this business. That is, we must to keep in mind that we have to have a clear records to know which is business owners' money and which is owned to the business. If business owner have salary or bonus from the business, that is deduct from the corporation when do the tax return, because that is business expense. But if business owner has dividend instead of salary or bonus, it's not deductible, requires corporate approval and tax accountant to review and issue the T5. This needed to do adjustment when do the tax return for corporation. It's different from salary bonus. It's not direct deduction from the corporation income tax. If the shareholder have loan from the business, then the business must get the interest or some interest revenue from the business owner. Also can create income or interest benefits issue because the business get the borrow the money to the business owner. The business must got revenue from this loan. We must get this revenue reported under both accounting and tax purpose. And the other thing business owner needed to know, personal expense paid by the corporation are not automatically business deduction. For some business, only have a bank account, then they have the credit card. For some reason, business owner paid some purchase, for example, insurance or some cell phone call for business from their credit card. But this credit card must be recorded under this business to record due to the business owner. It's not the personal expense is part personal expense, also part belongs to the business. This is, I can give you some what kind of items must be added back to accounting profit. For example, we have some penalty or interest paid for the business. We later file a tax return and CRA issue a penalty. This is deductible from accounting purpose. It's minus from the revenue and get accounting profit. But from tax purpose, we have to add back this deduction because from CRA's point of view, no, this is not the regular, it's not routine expense. It's not eligible to deduct from income. So that is we have to do the adjustment. Another example if we have disposal of assets we have lost, but from accounting it can be deducted. From taxable, no, you can't. That is a lot of things we need to do the adjustment. We just list some examples here. Mhm. Also, we have some example to we can deduct from accounting purpose to tax purpose. That's to say, even though we have maybe we have loss from maybe we have some profit from accounting point of view, but some deduction we can also deduct as well for tax purpose. For example, we have capital cost allowance from Schedule 1. That is a kind of CCA we deduct from accounting purpose. But we also deduct for tax purpose. We can add back. Then we can get more loss to get the tax payable less than accounting statement. It's a kind of adjustment benefit to business owner, which we can get lower tax balance. Okay. Mm-hmm. Now we are going to the corporate filing and the payment date. It's we have to remember this date. If usually there has 6 months, 2 months, and 3 months. 2 months, that's meaning tax filing deadline after the tax year end. If we choose the fiscal year end on December 31st, then it's next year, June 30, that's the deadline we have to do the tax file. We have 6 months. 6 months we needed to prepare accounting statement, and we needed to do the tax return online and submit. CRA will do the NOA, then finish the whole T2 process. Then we know, we have the tax balance, or we do not because we have the loss. Mm-hmm. But general balance due deadline is after year end. This may be confused you because that is to say we have 6 months to prepare the return. That is maybe June 30, 2027 is the due to submit the tax return. But why I have to pay tax only 2 months in 2027? 2 months means that is only February 28 or 29 in 2027. At that time, I haven't finished the tax return. Yeah, That's correct. Your question is correct. And that is the true, that's the CRA requirements. Even though business owner haven't finished corporation income tax, the T2 tax bill haven't been submitted, but we have to pay the tax. you know yeah, the business owner has to maybe contact a CPA or some tax preparer to estimate how many tax you have to pay for the past fiscal year. We cannot wait. If you have the profit, you have the big, very good operation, you will have the profit. Then you have to estimate how many tax have to pay the CRA. And by the end of 2 months after fiscal year end, we have to pay. That is just the estimation, even though we don't know the exact amount we have to pay the CRA. And after 6 months later, we submit the T2 and the CRA, do issue the notice of assessment. They will let you know how many money you have to pay. Then CRA will compare with how many money you paid. If it's paid over, then you got the refund. If less, they'll have to pay again the balance you owe to the CRA. This is we have to remember that we cannot wait. That is, I always suggest a business owner before the fiscal year end, you have lots of work to prepare the tax return. You have to prepare all the invoice, which is for expense, which is for capital. You have to, download all the bank transaction, and you have lots of things to estimate how many tax you may have to pay. That is before the fiscal year end. Mhm. And after 3 months, there's a possible balance deadline for 13 qualified CCPC. That if you think you qualify CCPC, that is 3 months. If you not quite sure, maybe 2 months, that is the deadline, all based on your estimation. Lots of business owners are very very busy operating, that you really understand that you don't have lots of time to consider tax, because tax there's a lot of tax policy, tax rule is not easy to understand, to handle, or comply, but that is we have to do, yeah, always keep in mind there has tax deadline, there has tax amount estimation, there has the due date, balance, due date. Yeah, we have to. Yeah. Okay. Mhm. Then now we are going to T2 fail. Always the T2 fail will connect the books to the return. The book is the financial statements. I know lots of business owner has a bookkeeping either for accounting firm or list or themselves before the fiscal year end. We need to get final true balance and adjusting entry ready. True balance, that is the how to say, that is the summary for all transactions. For example, during 1 year, you have maybe 100 bank transaction. You have the money in, money out, or transfer, and the trial balance only has one line. Bank balance is maybe for 1,000 or 2,000. That is trial balance will show in only the summary for different multiple transactions. Maybe we have bought lots of office supply, pen or paper, but we only have one line to say office supply expense 5,000 or something like this. That is the true balance we have. That is the summary for all the year transaction. We only need one summary. Mhm. Financial statements, I said that is accounting all the transaction that is based on true balance. Financial statement, we have how many we have assets and how many we have the liabilities, how many money we needed to pay vendor, how many money we needed to pay the bank if we have the loan from a bank, and how many we have to pay the employee if we have the employee salary or some bonus. That is a financial statement. Also, the other important financial statement is a profit and the loss statement. You can also say income statement. We have the revenue from either sell goods or we sell service. Also, we have the expense, office supply or rental or car, we have the gas, maintenance, or we also have cost of goods that is from selling goods. That is deduction from the revenue, and we can get how many profit for the whole year operating. GIF, that is, I mentioned that we have this kind of information, how many, when you register the business and how many maybe shareholders, that is, we need to report during the T2 to CRA. The CRA monitor everything. That is not easy. The third thing is Schedule 1 book to tax reconciliation. Schedule 1 is the one that is I saw here. We can add back or deduct. This is called Schedule 1. That is, it's the bridge, the bridge between accounting book and T2. We needed to do the adjustment. That is why T2 is not easy, just because the adjustment. Mm-hmm. And supporting schedules for tax and credit. That is, for a T2, we have so many forms. For example, if we have capital assets, for example, you have an office or you have a capital car, then you have to the amortization every year. This amortization is a single forms to list what is assets you have, what is class, and what is amortization rate you can apply, and which year you got these assets, what is the balance. That is single form to support one number in the accounting statements. CRA needs to know all the details information instead of only one number. If you disposal a capital, for example, you sold your capital, your business car, then you have to fill this kind of form as well to say on what is accounting balance, what's the value you have, and how many money, how many revenue you get from selling this car. Then whether you got a profit or loss from selling this capital, from selling this car, you need to report the details to CRA. Then CRA can know whether this profit is deductible from corporation revenue or not. That's the detailed forms we have to fill for CRA. Um, there are so many forms. It's not the same as every year, just based on what kind of special transaction happened in last year. This is another thing business owner need to know. If you have very good operating in last year, it's better not to, get another disposal of this kind of revenue trigger transaction. That is will get your profit increase. You have to pay more tax. It is a kind of tax planning. It's also another reason I want to let business owner to consider before the fiscal year end. It's not just, wait, just focus on everything on operating. Once the fiscal year end finished, you cannot do this planning. It's before in advance. You need to know the estimation what and how much tax may have to pay. Then you can make a decision to either we have another revenue or just get more expense happened to the business. Okay. And this is the keep records that is plain income deduction and ownership. As I said, business owner needed to organize invoice, needed to have very clear records on business money or shareholders money because that is the supporting documents or records can get CRA agree. Oh, yes, you are right. This is for business. It's not for personal. This is business money. This is a personal money. This kind of means has to be kept in maybe the business office or shareholders residential of address. At least we have to keep these documents safe for many years just in case CRA may audit. These documents include sales contracts, invoice or revenue reconciliation, or suppliers invoice. That is very important. We need to get the invoice to determine it is expense or capital, or that is GST, HST, or deduction, or not eligible. Yeah, receive and for the proof for business purpose. If we pay some membership for growth, that is not a business proof. We cannot deduct from tax purpose. in the bank, credit card, or loan. That is to say, which money belongs to personal or business. Payroll dividends is important to calculate for business expense or for some business deduct expense, adjustment deduct expense for tax. Capital assets or some capital minutes books about that is you if you want to pay dividends to shareholder, that we need have to have a mini book to support. All this was approved before pay the money. Okay. Mhm. This is some error, I have highlighted for several times that business owner needed to keep in mind. We cannot late will trigger penalty or some interest paid or late balance or installment payments. Even though we haven't finished the tax return, then we have to pay just to do the estimation. And personal tax in expense, we always check, is this a personal expense or this is for business? Even though that is a business purpose, just as you have some gift card to potential customer, it is for business purpose. But the CRA don't think so. They have different judgment. They ask you to do the adjustment. Means that it's just back or some wrong business claim, and maybe you business revenue is already over the limitation, then this business will not apply for the low tax rate. Okay, this kind of error, it's not always happen, but once one of them happen, they'll go to trouble. Yeah, we have spent lots of time to talk with CRA to apply relief or waive lots of things, and we have to wait. Big stress. Okay. This is a practice. I think that's because the time we are not going to do this. Just no, we have the low tax rate. We also have higher tax rate. Different business have different rate. We needed to check. This is also the deadlines when we have to pay the tax if your business have profit. This a tax calendar just to get a business owner to understand to keep in mind it's time for me to do tax return and when I have to pay the tax. I think at this moment we don't have to write down, have a notebook, just ask AI because I also get my clients to use AI to do to do accounting statements. Just use AI to organize all the bank transaction, to organize all the invoice, and work out Excel for on-trial balance, financial statements, even though this transaction may be more complex. They have payroll, they have vendor purpose, but they all can use AI to work out financial statements. And a business owner then maybe just hire accounting firm or some taxpayer to do the tax return is enough. That is to say, business owner can use AI to work on accounting to work on bookkeeping. It's it can be done. Yeah, because yesterday I'm so happy to teach people to do that. It's a success. Mhm. Yeah, just keep learning. AI can do everything for us, but you have to, review, and you need to make final decision. Is yes or no, and don't send sensitive information, business, um, name or invoice amount or SIN number to AI. No. Yeah. Okay. Okay, I have some tax software recommendation. That is because I use it for clients. I like them because it's simple, but on different rate. Future tax, that's the most cheaper, but it's very, very friendly. I like it. And tax cycle T2 software may be more complex, and the price are high. But if your business have complex business transaction, yeah, have to choose this one. And you can check the CRA website. There's lots of accounting software for tax software for business. Not easy to select. Maybe just try different one, different charts. Okay, that is all my sharing on corporation income tax, and I hope all business enjoy this sharing. Yes.
Thank you, Cathy, for the presentation. Now we only have 2 minutes left. I don't know if any of you have a question for Cathy. Okay, let me check the chat. Okay. No question so far. Okay, so Cathy, for someone who has recently incorporated their business, what should they start doing from the beginning to make tax filing as easy as it can be to avoid problem later on?
Yeah, I would say that's the first thing they need to keep in mind. There has the deadline for tax and accounting. The first thing they needed to do is save and organize all the invoice or expenditure. They can, create a folder to save. Just scan, use the cell phone to scan the invoice or receipt, and keep them in one folder. And maybe after 3 or 6 months, to see all the invoice there, and just talk maybe accounting firm or something, or just check with AI, they are saved. And the other thing is you can choose accounting software, maybe Wave or QuickBook. Try to learn from AI to make a simple accounting records.
Thank you so much, Cathy. It's one now. Thank you everyone for joining us, and I hope you enjoyed the session. And if you have a follow-up question, you can share them with me, and I will direct them to Cathy. And just to let you know that there will be other webinars. So the next webinar will be in French on Thursday, September 3rd. And it will be with Yvan Diro. And if you have any question, like I was saying, don't hesitate to send them my way. And the replay will be shared with you as soon as it's available. Thank you again to everyone, and Cathy, and I wish you a wonderful afternoon.
Thank you.
Thank you.